If you've ever wondered whether you should buy LEAPS or shares, well, stay tuned because in this video, we are going to do a demo and compare buying shares versus LEAPS options for a particular stock, and then you can decide which best fits your budget. So welcome to my channel. I'm Terry M. Lee at Simple Step Investing welcome to my channel and Hi, I'm Terry M. Lee, and welcome to my channel, Simple Step Investing and Trading. If you're new here, don't forget to subscribe and hit that notification button so you do not miss any new videos. So let's get started. So if you watched any of my videos, I have discussed trying to find a strategy for my niece who's just completed her freshman year of college. I wanted something for her that didn't require a lot of time analyzing and reading charts. And during this discussion and investigation, we came up, hey, is it easier to invest in buying shares for the long-term hold or buying LEAPS? So before we sort of dive into all the nitty-gritty behind it, exactly what is a LEAPS contract? So LEAPS, as you can see here, stands for long-term equity anticipation securities. Woo, that's a mouthful. So essentially what it means is that it's a long-term contract that equals approximately 100 shares of the stock where you're controlling it rather, and it's typically held for at least a year and a day. Then it becomes a matter of what is more cost efficient or effective using this. Is it better to buy, let's say, 100 shares or this one LEAP contract? You might ask yourself, why LEAPS? Well, the short version is that it costs a fraction of what it costs to buy 100 shares. Therefore, it becomes more capital efficient. So let's go to the Batcave where we're going to see this in action. Over here, I have already prepped everything, and this is Eli Lilly back in March of 2023. It's at a low. As you can see, it comes down here, and it really just takes off, and it reaches its peak around July of 2024. So a quick calculation, this would have been more than a year of holding this particular trade. So we're cheating essentially right now because we know our dates, but we're going to see exactly how much it would cost or as close to as possible. And then we're going to see which one, quote unquote, is the winner. Now, for this part of the demo, I'm going to be using Schwab's Thinkorswim desktop application. It allows you to go back in time, use real numbers, what the market was actually doing right then and there to backtest or simulate what was going on. In this example, we are going to use Eli Lilly's as our stock, and we are going to buy 100 shares, and we are going to purchase. Right now, the current price is approximately $310.51 for Eli Lilly at that time. Over here on the right in the top corner, I have picked March 8th, just after the market open of 2023. And in this particular account, it's $100,000. So I'm going to push play, which means the market is open as if we were running or in the market at that time. It's going for approximately $310. So I'm going to click this and I'm going to click buy down here in the bottom. We are going to buy 100 shares and we are going to confirm and send. And as we'll see, this is approximately a little over $31,000 out of our account. And so we've purchased it. Now we're going to buy a contract, and the furthest out that we can purchase at this time is January of 2025. Now, normally I tend to buy what we call closer in the money, but for this demo purposes, we're going to choose what we call at the money. Beyond the scope of this video, but let's just say we're going to buy this. Now, this $59.75, remember, we're controlling 100 shares. So this is really times 100, which is going to cost us approximately $5,975. And we are going to purchase this right here. And we've purchased this. So if I go over to our monitor tab, we can see both of these have been purchased. I have purchased this option contract here. Right now it's slightly down and I've purchased 100 shares. Now we are going to not say cheat per se, but we're going to fast forward in time to when I know we're going to get out. And we are going to go up to July of 2024. To scroll down here a little bit. And we are going to pick July 15th. This was during this particular time frame. And over here in the top left corner, see how it's got this little squiggly line? I mean, it's bringing all the data in. It's working. All the Keebler elves are working really hard right now. And so we're going to wait for our profit and loss to update. So here we are. So this one contract that cost us approximately $5,900 has made over $59,000. And in our shares, it's approximately $65,000. We can also see that our profit and loss percentage is over 200% with the shares and over 1,000 with the option trade. So in fact, let me bring up my little summary right here. And this is approximately, I've done this a couple of times, so the numbers might be slightly off. But with our shares, it cost us nearly $31,000 a little to get the shares with a 200% gain for a net profit of around $34,000. Whereas our LEAPS, which cost us $5,900, has a gain of $53,100. That original slide where I said it's more cost effective of your capital to invest a smaller amount for a possibly much larger gain than with the shares, because we still have to take out our original cost, which would have been $31,000 versus $5,900 here. And then you can definitely see your gain. So I am loving LEAPS. I don't know about you, and this makes me so excited to be able to show and teach this to my niece. So what I'd like for you to do is comment LEAPS below if you'd like to learn more about how you can leverage LEAPS in your overall portfolio. And let me emphasize that Eli Lilly is on the pricier side of stocks. You don't have to have a huge cash amount. There are some that are several $100s and not necessarily something that's like a $7,000 investment on LEAPS contract to be able to take advantage of doing LEAPS. Don't forget to, again, give me a thumbs up if you found this helpful, subscribe, and I'll see you next time.